This is the MTPredictor weekly market update for September 21st. So I've got a lot of stuff to cover, a lot of different charts to look at, and I want to try to get done as quickly as possible. So here's the monthly chart of the S&P. You can see where this rally started here at this major decision point, this monthly decision point support, and that came off of this swing low here. Again, we just take our decision point to find where's our next major level of support. Well, there it was on the chart ahead of time. All right, that's where it kicked off this rally here. We're in a monthly wave 3. You see here is the last swing high. This is the decision point off of that swing high. And again, we call these decision points because the market needs to make a decision when it gets to these levels. Normally, about 2/3 of the time, these act as support or resistance. About a third of the time the market trends and will go through these levels. It's what we call decision point continuation. It's also a trade that can be initiated in any market or time frame when we see this. So we got a close here above the level, and then that high was taken out, and that's telling us that it's pointing us to the next level here. So we've gone, this has turned in now to a wave 3 here. Here's your maximum wave 3 target around 2069, 2070 we'll call it. That's the monthly picture here. Let's go down to the weekly chart and see, well, basically here's that monthly resistance we've gotten through. It's kind of a real, not a pretty, but 5-wave pattern here. Just gone through typical wave 5, right around that typical wave 5 area here. Here's your maximum wave 5. Okay, we do have a high volume spike here that's forming or closed this week, but we got a blue buyer's candle on the weekly chart. All right, we need to see a red seller's candle. We need to see the high here, which is 2014.50, remains the high. Ideally, or at least see a red seller's candle without them being able to make any more fall through to the upside. If that happens, then this may be an indication that professional selling is coming in to the market and not buying. All right, but we'll have to wait and see. Let's go down to the daily chart here, and you can see we've got our next daily decision point resistance level here. Just shy of that level here. Those of you that have the add-ons for Ninja, you may have a decision point sell signal here. I do expect that if they break, this was your options expiration Friday here, if they break Friday's low, which was 1915.50, right, that we should at least pull back probably over the next few days if they break that down to the 1980 to 1990 level. Okay, just in here, and then the full correction would be back to the decision point off of the last swing here around we'll call it 1960. All right, so this was our options expiration rally. Remember, about 70% of the time the market will rally into options expiration Friday here. That week, that's what we got, and we throw in a Fed announcement in there as well. But we closed the week here with a red seller's candle. Sellers were overcoming buyers, and we'll see if they can continue that, breaking that Friday low. If so, we should start maybe a couple days of correction. A full correction would be again all the way back around to this 1960 area where we should find the next support. So it was a big week for the markets. There was a lot of data, a lot of information. We had the Fed meeting, again, options expiration. We had that new gold exchange in China, that free trading zone in China that is now a way to trade gold outside of the US dollar. It's all in yuan. So that's an interesting development. We had a economist in the Treasury Department, Kenneth Austin, who kind of broke ranks and is calling for an end of the US dollar as the world reserve currency. Obviously China and Russia are the BRIC countries all are working ways around the outside of the U.S. dollar for trade in things like oil, and I think I don't know if it was last week that they were getting together, or maybe it's going to be this week, they're getting together to look for ways outside to transfer money between countries and so forth outside of the U.S. SWIFT, I think, system it is. That's that wiring system. So a lot of this stuff going on but kind of behind the scenes, all is going to have an impact down the road on things. And so, well, let's look at the U.S. dollar here, because it's been quite an interesting period here for the dollar index. So where's my DX? There we go. All right, here's the daily chart of the dollar index, but let's go, well, let's start like we did the ES. Let's go to the monthly chart here so we can see take a decision point off of this level, and let's see, where are we? That goes back to, just get a little more perspective here. Let's go back to 1990. So you can see here we are currently, obviously. So we had this nice TS1 here, the nice move into June of 2001, and then you can see the dollar is just collapsed after that, finding a bottom here. It was a nice buy signal here, and then on the weekly chart, all right, we had this major decision point support here. You can see the target here. I can drag this over, is an important level. Alright, so this was our major low there. Here's our major weekly resistance level here in the dollar. And you can see, I'm just going to put a line here as we're just about approaching this high. And you can see, I probably didn't get that on there very well, but you can see each time the market has come, and it's been, it's going back to June of 2012, first time it hit this level. So a couple of years it's hit this level and it's been rejected. It's hit this level, it's been rejected. Here's the highest high there, again, still in that area, immediately rejected. Alright, so now we've come up into this level. Alright, let's take a little weekly decision point off of here, because this is an important low right here. And we'll go down to the daily chart and we'll see what we see there. But this is an important level, right? Because if the dollar gets through this level, it'll be the first time, obviously, if we get a close above this level, just get this on a little better. If we get a close above this level and they take that high out, right, we may see more upside there in the dollar. We can see on the weekly chart. We'll take the next weekly resistance. Okay, we'll be here. Whoops. That'll begin right around 85.70. All right, then you're going to have a larger resistance level up here on the weekly chart. This would be another major resistance level. All right, now I think you can see we've gotten rejected here. Right now, the Fed has the best of all worlds, really, because they've printed a lot of dollars, yet the dollar is gaining strength, but it's not too strong. It's not a deflationary problem, at this point. But if we do start taking out these levels, and we'll look at the daily chart here, and it does become a problem, then they're probably going to attack the dollar. But here was our major weekly low here. Here's our initial rally, which is a potential wave 1 if this is a start of a new trend in the upward direction, because it's a major low. A 1. This TS1 here is an ABC correction in wave 2. So I'm just going to put the analysis on. You'll see here's the A, the B, and the C here. This is what this TS1 is. It's an ABC correction in wave 2, and obviously we've reached the maximum wave 3 target. Again, testing this level here, we can project the wave 4 pullback. Let's do that. I'm going to go down wave 4, just a couple of clicks. Tells us there's where the wave 4 should come in around 83. Alright, so this is a critical area here. We'll see if the dollar begins to pull back. It's due for a correction. We'll see if it's an area we anticipate it should correct. If we look at the metals here, we'll look at but after it corrects, we can get another wave 5. We'll get a wave 5 potentially, retest this level, and then we're going to have to see if it ends up taking that level out. But let's go to the let's go to gold, and let's go to the weekly chart of gold here, and let's take a look and see. So gold, we had, I put some additional trend lines on this. Well, I'll go to the monthly chart first so we can kind of see. So the monthly chart, alright, this is interesting now. We had a 5-wave pattern up, nice 5-wave pattern up here in gold, right, with the peak there in September of 2011. Then it began to correct here. Let me move these areas out. That was the minimum typical. It went even beyond maximum wave 5. Alright, so we know after 5 waves the tendency is you get a correction back to the wave 4 DP. Well, in the monthly chart, here's wave 4. This is the monthly DP, which would put gold down about $530 an ounce. Alright, so it has that potential based on the pattern here. Now we'll look at this support level that we're in here if we go down to the weekly chart. So the weekly chart, also you've got your 5-wave pattern up here. Again, the correction we anticipate back to the wave 4 DP, and that's this level here. This is the level we're in now. Alright, so this is a major support level. If that area gives way, alright, if this no longer acts as support, so far it is acting as support. Alright, but if it gives way, we know if they break the wave 4 DP, then we go to the start of the sequence of the wave 1. Alright, and we take a decision point off of the bottom of the wave 1 here. And that becomes the next target, which would be put gold around just around $1,000, a little over $1,000 an ounce. Alright, but so far you see this is a large area here. It's held as support. We're coming into this level as gold and silver, and a lot of these soft commodities as well have gotten hammered. I'm going to take a decision point off of this last swing low here. Okay, so we've come into another support here based off of the last swing, a little weekly support, and we'll also in a larger degree weekly support here. Alright, so we'll see if we do, they've gotten a bit oversold here. Let's look at silver. Alright, here's your weekly chart of silver. Same basic pattern here. There's your 5 waves, your correction back to the wave 4 DP here. Okay. Alright, now this, you can see the wave 3 here. We're still really kind of in this general area here. S&P, or the gold solidly in its support level here. And you can see we've just got to close below that wave 3 low there, and we can take a decision point off of this level. Alright, So silver also is extended to the downside here. I expect that we probably will get a small rally, maybe back to 1830 to 1880 level. All right. But the last stop, I'll show you here, is our pattern. So you can see we had a 1, a 2, a 3, the 4. Let's project that wave 5 down because we've been waiting for this for a long time to reach this level here, and we got pretty close on Friday. All right, here's our, I'll make this bigger here. Here's our minimum wave 5 target here. All right, that's just down to around 1750, 1770, right in that area. All right, so we may see that first before we get a rally, or we may get a a couple of days of rally and then a rollover into this level. All right, I am already short puts down here, looking for a dollar correction, which would allow these metals to rise, rally off of these levels a bit, and then we'll see how far things progress from there. But again, that patterns on the monthly chart, you can see here's a monthly chart of silver here. In this, you can see it's just basically the rise here, your ABC correction. Here's your next trend line support going back to late 90s. So it's an interesting picture because you've got the markets, stocks at all-time highs. You've got the metals at we're at lows for the last going back, or retesting lows going back here in June, July of 2000. I'm sorry, we're back here. Where are we here? April, March, April of 2009, when the stocks made their low after the crash of 08. The interesting thing is, if you go back to the Lehman crisis, gold and silver are since the Lehman crisis have outperformed still, even though you've got this big correction in gold and silver, they've still outperformed the stock market over that period. So you got to kind of take things in a little perspective. But we'll see if these levels hold. If these levels, larger levels, start to give way, and we do get that dollar breaking that resistance level, I don't think it'll last long, because I don't think our government's going to stand for a dollar that's too strong for very long. And even if we get deflation, it usually doesn't last long. And so it would really just be a good opportunity, I think, to pick up more physical metal if we do get really depressed prices against some of those levels that we looked at. We can always look at the capacity utilization. That will give us a heads up if we're going to have inflation. This is courtesy of Crystal Ball. We check this every once in a while, but you can see that the blue line here is your capacity utilization, and your CPI is this amber line here. As the capacity utilization exceeds 85, it's a leading indicator for inflation. And you can see back here in the 70s, when capacity utilization broke that 85 level, it was a signal that the CPI, or inflation, was going to be heading up. And you can see it peaked out there right around 12%. CPI around 12%. Happened again here in the late 70s, breaking 85 there, and you can see interest rates, which were around 6 or 7%, went all the way to 14, almost 15%. All right, so we can see when capacity utilization where we are currently is low, and that's a sign of a slow growth, recessions, things like that. You can see, obviously, look at the period of the crash there. What happened to capacity utilization in the CPI? All right, so here we are currently. So we keep an eye on this. Again, we know we've got a lot of printed dollars around the world, but it's like having a lot of kindling with no match. This would be a match that would light any kind of inflationary fire. Right. Then if that strong dollar continues, all right, and it becomes a deflationary problem, then I think they'll attack the dollar to weaken it again, and so it's going to be an interesting scenario. But the reason, I've been buying physical metals for a while now, so several years. But the reason I do that is not for a trade. I do trade this separately, the paper, and use options and stuff. But just buying the metal is just, to take 20 ounces of gold back in 1970 would buy you a nice car. Even though that car might only cost, $5,000, $6,000 or something, with that same 20 ounces of gold today will buy you that same nice car, and that's why you buy the physical metal. It's just that hedge against inflation. So anyway, interesting times here. The other thing is. The metals telling us something is the strong dollar and the metals decline here with the stock market at all-time highs is setting up for a big reversal of all these markets heading into October. So it should be a quite interesting period here. Anyway, I've probably gone over time. There's stuff I wanted to get to. I don't have time to get to. But keep an eye out this week. We'll watch and see if the metals start bottoming, see if the dollar starts a correction, and then watch stocks, because if we break Friday's low, maybe we begin a small correction there, maybe a few days, and then maybe that full correction back to that decision point level we looked at. All right, so enjoy the week, and we'll do it all again next week.